Some more tax relief could be on the horizon for lower-income Illinoisans. Two bills in the Illinois General Assembly would expand eligibility for the Earned Income Tax Credit. The proposals call for more Illinoisans to be included in the program, and they appear to have bipartisan support. Tonight, as part of our Firsthand Living in Poverty series, we take a look at the credit and what it could mean for low-income households. And joining us to discuss the proposals are Harish Patel, director of the group Economic Security for Illinois. That's an advocacy organization leading a coalition of over 30 groups statewide in support of this measure. And Lisa Christensen-G, Director of Special Initiatives at the Institute on Taxation and Economic Policy. Welcome both of you to Chicago Tonight. Lisa, remind us what the Earned Income Tax Credit is in Illinois and who is eligible to benefit right now.
Yeah, so the Earned Income Credit is a tax credit, which means it can help offset your Illinois personal income taxes or provide you cash if you don't have enough income tax that you owe for low and moderate income families that have income from earnings from work. So households that have under $60,000 may qualify. And Illinois has had this credit for 21 years and has taken steps over the last 21 years to strengthen it, to make it an even stronger economic security program. And it is tied to the federal Earned Income Tax Credit.
Harish, how does money saved or reimbursed with the Earned Income Tax Credit affect low-income families?
Yeah, so, it's important to know that the Earned Income Tax Credit, as you just shared, is a federal program, and the state has a matching program. And most of what families do with that money is either pay off their debt, they're spending it in the community, they're buying things. And because it targets mostly low-income folks, they're just investing right back into the community and paying taxes on it. We know from data that most of them are creating a multiplier effect. For every dollar that we spend EITC, they're spending it and creating a multiplier effect around $1.50 to $2. And that's what ultimately makes Earned Income Credit a really effective anti-poverty program.
So there's a stimulative impact here. Lisa, we mentioned the proposal to expand the Earned Income Tax Credit. So under these proposals, who now would be eligible?
Yeah, so under the House bills currently under consideration, if you're an 18 to 24-year-old or over the age of 65 and you don't have a child, you would newly become eligible for the credit. Similarly, there's a whole group of people who have qualifying incomes right now, but because they file their taxes and pay their taxes with what's called an ITIN number instead of a Social Security number, they currently don't qualify under federal eligibility rules, but these bills would allow them to also become eligible.
So this could impact immigrant communities, as I understand, and caregivers would also be included in the expansion. We talked with a mother of two kids under 6 years old, Humu Isifu, earlier today about what the expanded credit could mean for her and her family. Let's listen.
The expansion can be tremendously helpful in many ways. I can lower some debt. I can also save some money for some rainy days, get my car fixed, because I don't have no one that can help me. I don't have family members who have additional funds that can help me and my family. So this little bit of money can help a lot of families in many, many ways. To them, it's something little, but to us, it's something big.
So, Harish, what effect could this expansion have on low-income families?
Look, Humu is exactly right. This expansion, like Humu shared, will impact a lot of our neighbors. When we did our analysis, it's almost 1.27 million more Illinoisans would qualify under our expansion plan. And so what that means is, if you're a caregiver at home and currently you have to give up work or you reduce your hours and therefore possibly not qualify for the Earned Income Credit, this expansion bill that we're proposing will make you qualify and put up to $600 minimum credit into your pocket. And we know what that means for you, exactly what Humu said. She can pay off her debt, buy a car, invest in a home, and all of those have a multiplier effect to rebuild the economy.
All right, we spoke to someone that wasn't so crazy about these proposals, the president of the Taxpayers United of America, Jim Tobin. He said he is in support of the credit if all other welfare programs are eliminated, but here in Illinois, he's opposed. Here's a clip from him.
In Illinois, we shouldn't be increasing spending on this right now because Illinois is bankrupt. It is wasted the money that they've been spending. They've been wasting money on salaries and benefits for the government employees.
Lisa, no secret, Illinois does have budget troubles. How much could this cost the state of Illinois?
Yeah, so ITEP has scored the bill, and over a 2-year phase-in period, this will cost $130 million. The current program costs $400 million a year, and that $130 million is equal to less than a third of a single percentage point of the entire $40.6 billion budget that the state has for the current year.
So there would be a small cost to the budget, and the state would have to find a way to make up for that. Harish, we touched on how this could impact immigrant families that don't have Social Security numbers. Can you expand on that a little bit?
Sure. And I want to kind of respond to the question you asked previously, which is, yes, it costs about $130 million over 2 years. But I want to reiterate, every zip code in the state of Illinois has somebody who gets the earned income credit. It has a bipartisan support. Our bill has bipartisan support. Federally, when it was announced, had a bipartisan support because it's such an effective tool to put money into the pockets of people. And when we think through who else will qualify, yes, ITIN filers, which are individual tax identification number filers, will who currently do not qualify and have historically been left behind, both from the federal stimulus and here, will be qualifying under our proposal. They work, they pay taxes. Many of us probably know them. Those are the folks who would start getting a very small credit of, let's say, up to $1,200 a year from our expansion plan. In addition, when we did analysis ourselves, we know that Black and Brown communities will qualify at a much higher rate because, unfortunately, many of them have jobs that are low paying in our state, right? And so because this is a focus on low paying or low earning tax benefit, that's who benefits the most.
All right, we're going to have to leave it there. We'll see where these bills go. Our thanks to Harish Patel and Lisa Christensen-G. Thank you so much.
Thank you.
Thank you.